25 wallets just hijacked a third of all XRP. Are we about to watch the biggest crypto plot twist of the year? And spoiler, it's not Ripple pulling the strings. So picture this, it's late the other night, I'm curled up with my laptop and an oversized mug of espresso. Why? Because that's how we do things in crypto, right? Now, just casually scrolling through XRP scan, expecting the usual ebbs and flows of transactions, and then I spot it on the leaderboard of the richest wallets. 25 addresses are holding a mind-boggling 20.3 billion XRP. Now that's 35% of everything in circulation. Now my first reaction was, that's gotta be a glitch. My second reaction, an involuntary eyebrow rise so high that it practically migrated to my hairline. And that got me thinking, if the ultra rich are parking this much XRP, what exactly are they gearing up for? Now, you and I both know XRP has been that awkward range bound phase lately, right? Hovering around $2 and some change, trying and failing to kind of make a clean break above $2.20 for what feels like forever. So let's think of it like a kind of marathon runner who keeps bouncing off the starting line, knees high, just waiting for the gun, right? Everyone on the crypto Twitter's been complaining that the asset's lost its kind of swag, but those 25 mega wallets, well, they're silent, right? They're just loading up. And here's the fun part. Most of those addresses, they are not Ripple's escrow accounts. 8 are escrow, sure, but the rest, they're exchanges or what looks like straight up private vaults. Binance, Upbit, Uphold, BitThumb, they're all holding kind of truckloads for clients who clearly aren't fazed by sideways charts. So let's swap scenes with me for just a second here. Imagine walking into a casino where one table, just one, has a silent gathering of billionaires. They're not exchanging small talk, they're not even sipping champagne. They're stacking chips, staring at the dealer, and the stack just keeps growing. You can hear their conversation, right? But the chips speak kind of louder than their words. They're expecting a monster hand. They're basically what the XRP ledger feels like right now, right? The whales are talking and they're talking with their wallets. And just to kind of drive that image home, let's zoom in on the numbers. Addresses holding at least 20 million XRP, meaning each one already worth north of $42 million, have quietly added 272 million extra tokens in the last week alone. Okay, so that was 272 million extra tokens in the last week alone. Now that's the kind of grocery run where you leave the store with every single aisle in the cart. Pull back to a monthly view and it gets crazier. Accounts, in the 10 to $100 million range or million XRP range, grabbed 900 million new XRP. Now that's $1.89 billion. Yeah, with a B. Right, stuffed into cold storage, while the rest of us debate whether the next candle is going to be green or red. Now, here is where it gets spicy. Some critics scream centralization whenever they see big stacks in a few hands. And it's a fair complaint, like worrying that one family kind of bought up half the seats at a concert. But there's another side here. If those seats are VIP and they keep buying, maybe they know the headliner is about to drop a surprise track, right? Now, according to the analyst who kind of tweets as all things XRP, those fat balances, they signal something more optimistic, right? The wealthiest players are betting that XRP isn't just another altcoin riding the hype cycle. They believe it's gearing up for a monster breakout. Now, they're not tweeting moon emojis or posting rocket gifs, right? They're just locking coins away, letting the ledger keep score while the rest of us trade on memes. Okay, so let me confess, when I first read 25 wallets hold 35%, the skeptical voice in my head started compiling every kind of crash scenario known to crypto kind. Remember 2017 BitConnect, remember Terra's freefall, right? We've seen how concentration can become a ticking time bomb. But then I dug deeper, right? 12 of the top 20 wallets belong to exchanges. 2 more are Ripple's operational accounts. And the remaining balance is scattered among what looks like institutional custodians. The translation? They're not talking about kind of one shady figure kind of stroking a white cat, plotting a rug pull, right? We're talking about multiple heavyweight clients spreading their bets across regulated platforms. Now, they may be whales, but they're diversified whales, and that changes the risk landscape. Okay, so think back to April 28th. At that slice in time, the combined stash of the biggest XRP holders sat at 36.859 billion. Fast forward a single week and boom, 37.131 billion. Now that's a net add of 272 million new shiny XRP. Now every chartist on X loves to draw symmetrical triangles. I prefer a good old-fashioned accumulative curve, and that curve is tilting up to the ski jump ramp. But accumulation alone doesn't guarantee liftoff, does it? Now, we have still got an elephant in the room, or maybe even a trio of elephants in the room, right? First, there's the SEC saga, always lurking like a soap opera villain waiting for the next episode. Second, the overall macro market, Bitcoin dominance, interest rate whispers, you know the drill. And third, you've got sheer psychological resistance. Once the asset stalls around kind of a big figure, traders become hesitant. Yet here's where the ultra rich have a habit of flipping the script, right? They don't mind parking cash in an asset that they believe will sprint later. So think of them as marathon investors with iron lungs, jogging in circles while everyone else waits for the water station. The problem or challenge is simple. Can any kind of asset that is with at least as that much wealth concentration still attract new retail buyers without scaring them off? It's kind of like showing up at a neighborhood bake sale and discovering Jeff Bezos just bought half the cupcakes. Are the rest of us, bidding for crumbs? Well, that's the emotional hurdle XRP faces here. And yet, bullish whales keep loading up, which suggests that they believe everyday holders won't be spooked. Maybe they expect liquidity events, think ETFs, cross-border payment deals, or even a surprise Ripple settlement, right, to open the floodgates. Or maybe they're just comfortable earning their yields through on-ledger utility until price action actually catches up. Okay, so let's break down an analogy, that kind of clicked for me, right? Remember the early days of Tesla stock. For years, it was range-bound, bouncing between anxiety over cash burn and hype about the future dominance, right? Institutional buyers kept nibbling away, right? Seemingly unfazed by quarterly volatility. Then one day, like a shaken soda bottle finally popping, the share price erupted. Now in hindsight, everyone said, well, obviously institutions knew what was coming. Well, right now, XRP feels like that pre-eruption bottle, right? The fizz is building, but you just can't predict the exact shake that will send, the foam skyward. Okay, I can hear someone in the back row over there asking, but what if those addresses are just exchange hot wallets, rotating funds? And it's a good question, right? But the chain data shows most of them actually label as cold custody, not hot wallets. So Binance alone has separate operational addresses for day-to-day withdrawals versus deep storage. The ones in the top 20 tend to be the latter, right? The Fort Knox equivalent, right? And you don't shove hundreds of millions into cold storage if you plan on flipping them next Tuesday. That's long-term and long-game thinking. And here is a personal story that puts whale psychology into perspective. Now, a friend of mine, let's call him Sam, we know Sam well from the most recent videos, once kind of bought an entire floor of graphics cards, during the 2021 Ethereum mining craze. People laughed, said GPUs would be dead inventory the moment the ETH merged. Now, Sam was unmoved. He argued that the worst case he'd liquidate as tech salvage, right? Best case, he would pivot to AI compute. Fast forward to the AI boom, and guess what? That warehouse of GPUs is now a gold mine renting capacity to startups. Now, sometimes conviction looks crazy until it doesn't. Now, these XRP whales, they might just be the Sams of crypto, front-loading conviction months before the narrative flips. And of course, retail sentiment is still skeptical, right? You open Reddit and half the posts are, why isn't XRP pumping despite good news? Or should I just switch to Solana? And the irony here is thick, right? Whales are hoarding, retail is yawning, and the ledger is quietly humming like an engine on idle. And so if you're thinking, okay, cool story, but what's the catalyst? I've got a short list for you. 1. Ripple's ongoing partnerships in cross-border settlements, right? Banks love instant clearance, and XRP is tailor-made for it. 2. Regulatory clarity, right? If the SEC case wraps in Ripple's favor or even partial favor, compliance-focused institutions might pile in. 3. You've got ETF fever, right? We've watched spot Bitcoin ETFs scoop billions within weeks, and XRP-centric product, could actually spark similar inflows. Now, will all three line up in a neat row this quarter? Probably not. But whales don't need pinpoint timing. They just need to be in position before the starting gun fires. So let's circle back to that 25 wallet figure because it's almost comical in its simplicity. Imagine if 25 families owned a third of every gold bar currently above ground. You would instantly assume that they know something about future scarcity, right? That's how legacy finance sees concentration. Sometimes alarming, often revealing. And if you're still worried that it spells doom, remember exchange wallets host coins for millions of everyday traders. So it's actually entirely possible that you and I have a slice in those mega piles without even realizing it. So it's like owning a share in a skyscraper because your retirement fund bought real estate exposure. And by the way, guys, if you're craving deeper analysis or just want to swap theories with equal obsessed traders, hit up our free crypto Discord server. There's a link in the description down below. We dissect whale moves, we chart weird on-chain patterns, and share the occasional meme about XRP to the moon. Eventual kind of layover included. It's chill, it's kind of geeky, and best of all, it won't cost you more than a couple of clicks. All right then, drum roll moment. Here's where the kind of story arcs, right? Imagine the next weekly candle finally punching through $2.20 ceiling, right? Volumes spike, mainstream headlines blare, XRP rockets on whale-backed momentum. Retail investors, FOMO ignites, liquidity floods in, and those very deep pocket wallets, well, they don't even need to sell. Their holdings are just kind of balloon on paper. That's the scenario that the ultra rich are playing in, right? And pricing it in right now. And if history teaches us anything, they're willing to wait months, even years for it. Patience is their unfair advantage. But let's keep it grounded. This is not financial advice. The markets do love to prank over-eager bulls. If macro conditions sour or regulators drop a curveball, prices can tank faster than you can say black swan. Yet, the ledger data screams one very clear message. High net worth entities believe risk to reward lanes more bullish, which means that while retail investors argue in comment threads, they're literally voting with billions. And numbers, they don't lie. They just quietly update every few seconds. And stepping back, what fascinates me the most isn't the raw quantity of XRP locked up. It's the psychology, right? We're watching a live experiment in, risk, at least to the whales. Dropping 14 million here or 100 million there is pocket change relative to the potential upside. To the average trader, tossing $1,000 into XRP might feel nerve-wracking, because price action is sluggish. But if whales are right, the risk flips, right? Upside dwarfs downside. It's like buying beachfront property before the highway gets built. Uncomfortable in the short term, but potentially life-changing after infrastructure arrives. So where does that leave us? In a classic kind of crypto limbo, right? Impatient, curiously hopeful, and second-guessing every chart squiggle. But there's an invitation hidden in plain sight. Ledger transparency lets us track these mega moves in real time. Every new inflow or outflow is stamped on-chain like a breadcrumb trail. So you don't need insider connections. You just kind of need, curiosity and maybe one extra espresso to stay up late scrolling. By following the money, you're effectively shadowing the ultra-rich, learning how conviction capital actually operates. And here is the full circle kicker. Those same whales are counting on one simple human tendency. Once momentum starts, crowd psychology shifts from doubt to unfiltering enthusiasm faster than you can screenshot a green candle, right? They know it, we know it, the market cycles know it, right? So they accumulate in silence, they pass the time, and they let skeptics entertain themselves with price jokes. Then, when the tide finally turns, their silence pays compound interest. Okay, so a quick recap while it's fresh. 25 wallets, 20.3 billion XRP, roughly 35% of the supply. Most are exchanges, custodians, not Ripple's escrow. So since late April, whale addresses added 272 million tokens in a week and 900 million tokens in a month. Analysts read this as a massive vote of confidence that XRP's next act is bigger than the range that we're trapped in. Does centralization risk exist? Sure, but from another lens, it's institutional level skin in the game, big enough to move markets, disciplined enough to wait for the right catalyst, and the moral? Follow the wallets, not the noise.